In today's Legal on 4, many homeowners with a home worth less than the current mortgage, also known as being underwater, are considering a short sale. If you're one of these people, there are some things you really need to know to protect yourself. Our legal contributor, Craig Wisnam from Bogutz and Gordon, is here with important information that I think you really need to know.
Yeah, there's one particular trap we're going to talk about today that people have to be very aware of.
Okay, and before we get to the trap, to understand all this, we have to understand how a mortgage works.
Yes, basically when you buy a house and have to borrow money to buy it, there are two documents. One's called the note, where you say, I promise to pay you back $100,000 and I agree to do that. And the other is the mortgage. In Arizona, that's usually a deed of trust. And that's the document that says, if I don't pay back the money I promised on this other document, you get to foreclose on my house. So those are the two documents that we're dealing with, and that's what causes this issue.
Okay, so tell us how the short sale works.
The short sale is where you owe more money on the note than the home is worth. So you say to the lender, the bank, hey, I'm going to try to sell it. Will you be willing to take less money than I owe you on this note and agree to the sale? And that can be good. It's a lot of work sometimes to get the bank to the point where they're willing to agree to that, because they have to make sure they're getting a decent deal out of this. And so it's not always easy. It normally takes a lot of time and negotiating.
So where's the trap?
Here's where the trap is. If you walk away from your home and the lender forecloses, there's a protection under Arizona law that they can't come back at you for any of the difference that you still owe them. So if you owe them $100,000 and they can only sell the home for $50,000, you're not liable.
And that's under foreclosure?
Under foreclosure,
okay.
Or a trustee, same thing, trustee
okay.
sale. So if you just walk away, you're protected that way.
Okay.
In a short sale, you're not automatically protected. So even if the lender says, yeah, we'll let you sell the home for less money, we'll agree to release the mortgage so you can sell it, it doesn't automatically release you from the rest of that loan.
So what do you have to do?
You have to get something in paper that says we forgive the rest of the loan if we go through with this deal. And of course, most lenders are expecting to do that. That's part of the process. But you don't want to realize, I never got that piece of paper, and technically if they want to sue me for the difference, they can.
And what kind of length of time do they have to sue you? Can they come back years later?
Well, there's normally a statute of limitations for how long can someone can sue you under a document, so it depends when you stopped paying and things like that.
Does that happen often?
It probably doesn't,
okay.
But you're worried about your legal rights, and that's why you want to make sure. People might be very surprised if they say, you know what, I'm going to try to do the little bit more honorable thing, or a thing to make it easier on the lender. I'm going to sell it. I'm not just going to make them do it foreclose and take it over. I'm going to make it easier on them. They might be surprised to find out they're in a worse legal situation. Now, you can cover that. You just have to be aware of the issue and make sure that if you agree to the short sale, the lender releases the rest of the amount you owe them, so you're not liable.
And I suspect most lenders would be willing to do that if they've gotten to the point that they're doing this whole thing.
They're doing that expecting not to get any more, but you want to protect yourself legally.
Absolutely. Get it in writing, right?
It's a simple piece of paper, yeah.
All right, that's the way it is with most things. Thank you so much, Craig. All right.